Hi guys, this is your LA Realtor, Spahi, here with our mortgage lender, Samantha Scherr from Movement Mortgage. So I came across a great first-time buyer property that I wanted to share the financial breakdown for. It's a charming, recently renovated 855 square foot, 1 bedroom, 2 bath, located in Playa del Rey. And it's listed at $559,900. Now let's take a look at what this home would cost you per month.
So Ash, if we had a first-time home buyer, we have lots of options for them. They could do as little as 3.5% down, or the common misconception is that you need 20% down.
Yeah.
So you could do 3.5% down on an FHA loan, or even 3% on a conventional loan, up to a certain loan amount. But assuming, let's say, the client wants to put 20% down, just your standard loan, 20% down, the payment on this property for $559,900. With taxes and insurance and your homeowner's dues, you're right around $31.60 a month.
That's not a lot.
Yeah, so it's pretty comparable to if somebody's paying in rent around $2,500 a month.
Mm-hmm.
Yeah, it's a little bit higher, but look what they're getting, right?
You're getting equity in a home.
Yeah, and a beautiful home that's yours.
Exactly.
Mm-hmm. So if the client, let's say, wanted to put just 3.5% down, the payment on that would be closer to about $4,000 a month. And that's because you're paying mortgage insurance. You have mortgage insurance when you put less than 20% down.
Okay.
But it definitely helps first-time homebuyers just get into a property, right? They don't always have a lot of money as a down payment, so it can be worthwhile to do that.
Definitely. It's a lot better return, too, than having your money in the bank.
Absolutely. One other thing I wanted to mention to you is if that same client is thinking, well, maybe I want to buy, but I'm paying $2,500 a month right now in rent. What would that mean, right? So let's say the client wants to stay in the property 10 years.
Okay.
We can do a breakdown that shows you if they're putting 20% down and the payment we said was around $3,000 a month or so versus $2,500 a month. Then you think, okay, so I'm paying my closing costs, I'm paying my HOA dues, all of that stuff. At the end of the day, after 10 years, we assume that this property will appreciate about 4% per year. And the property will probably sell for around $828,000 in 10 years.
Wow. So you're saying this person bought the house for $559,000, and in 10 years it's going to be worth over $800,000?
That's what we expect. I mean, and that's a very conservative expectation for the appreciation values in Los Angeles.
Yeah.
So that means at the end of the day that they're going to be walking away with $370,000 of equity on this property.
That's amazing.
So what happened when you rented for 10 years? You just spent $2,500 a month every month for 10 years and never got anything out of it.
Yep.
This, you've gotten your tax write-offs, and now you have $370,000 to invest in something else to go buy your next property.
Wow. There you have it. And that's what happens when you buy property instead of just having your money sitting in a bank. And that's why we're here to help. If you have any questions, feel free to reach out to us.
Thank you.
Thanks, guys.